More growth and less inflation. Europe will do better than expected in 2023. The European Commission has revised its growth forecast for the EU, which is now expected to grow by 0.8%, which means that Europe should narrowly avoid a recession this winter. The figures mark a sharp slowdown compared to last year, but show the economy is resisting the consequences of the war in Ukraine better than expected. According to the European Commissioner for Economy, Paolo Gentiloni, this economic outlook is not coming out of the blue.
Well, I think this is the lesson learned with the two major crises that we had, the pandemic crisis and the crisis from the Russian aggression, energy crisis. We showed that a common response, next generation EU, the SURE mechanism, what we were able to do together on the energy independence was effective and made possible to have a better economic outlook.
When it comes to inflation, the European Commission has lowered its forecast for the EU in 2023 to 6.4% and estimates that the peak has now been passed thanks to the lull in energy prices. However, headwinds remain strong as consumers and businesses continue to face high prices, eroding households' purchasing power. Brussels also warns that uncertainty surrounding the forecast was high amid lingering geopolitical tensions.
The risks are connected to the Russian invasion, the war, the consequences on energy. And this also in Europe triggered high inflation, also if now we know that inflation is not only connected to energy prices. So this is the bigger risk that we have to face. So if we continue with common response, I am sure that we can also count on better outlook than the one we presented today, which is better than expected, but not yet a quite positive outlook for the economy.
Ireland remains the best performing European economy with a surprising rate of growth at 4.9%, largely driven by the investment of foreign multinationals. On the other hand, Sweden is the only country in negative growth at minus 0.8%.